dubious oil bets, oil traders before Trump's speech. Even apprehensions, ARP involvement of government officials who is making money of this war. Please also do a SWOT analysis of manipulation and also take the broker Ruco English Merchant Bankers, another important people, find a view on these dirty bets. A small circle of dark pool-style traders and hedge funds appears to be reaping windfalls from oil bets placed minutes before key Trump-Iran statements, while fossil fuel giants and Wall Street banks profit from the prolonged war-driven price spike. Evidence is still circumstantial, but regulators and senators are now probing whether government leaks or insider-style manipulation enabled these perfect timing trades. Below, I'll break this into who is making money, a SWOT-style view of the manipulation, and the role of brokers, merchant bankers, and Ruco-type intermediaries. Who is making money from these dirty oil bets? Hedge funds and proprietary trading desks. In the 15-20 minutes before Trump's Iran pause productive talks posts, traders placed oil short and equity long bets worth roughly $580–950 million. When oil fell 10–15%, some positions may have netted over $100 million in minutes. These are typically fast money players, CTAs, quant funds, banks' prop desks, who can scale huge notional exposure via futures and options. Big oil majors and state firms. A Guardian-backed analysis shows the top 100 oil and gas firms pocketed over $30 million per hour in unearned war profits in early 2026, with Saudi Aramco, ExxonMobil and Shell leading the list. These profits come from the broad, war-driven price spike, not from individual bets. Operators, refiners and IC-approved traders also ride this via contango arbitrage. Possible insider or connected groups. The US Senate and regulators are investigating whether traders ahead of Trump's Iran-related announcements had access to non-public information, including potential leaks from administration or allied officials. No names of individuals or firms have been publicly pinned yet, but the pattern of repeated, perfect timing trades raises questions about networks linking government, commodity desks, and offshore or lightly supervised entities. SWOT-style view of oil market manipulation. Treat this as a SWOTish analysis of the manipulation ecosystem, not a textbook corporate SWOT. Angle, strength for manipulators, weakness for manipulators, speed and opacity, high-frequency trading, night session futures, and dark pool-like OTC tools let whales move huge size before prices adjust. Regulators and exchanges now closely monitor order book spikes. Abnormal spikes, e.g. 702,000 contracts in 1 minute, become red flags. Information asymmetry, policy piggybacking. Well-connected traders can front-run geopolitical pivots more than the crowd. If even a single leak is traced, it can trigger enforcement, fines and loss of license. Reputational risk is high for large banks. Legal grey zones. Much of this sits at the edge of front-running versus clever macro trading. Regulators must prove non-public information link, which is hard. CFTC, SEC and Senate committees are now explicitly watching energy markets, umbrella-style P.